My name is Noel Seymour, third year banking and finance student at the University of The Bahamas, and today I'll be presenting on the topic, competition is essential to increase the supply of Bahamian banking services. Competition, the act of creating strategies to persuade consumers to purchase a product from its competitors, is an essential driver of progress and innovation, and this principle holds true in every industry. I believe that competition leads to better customer service, more options, and overall a better experience for the consumer. But is there really competition in the banking sector in the Bahamas? And does competition even affect the availability of banking? The reason why I disagree with the prompt is because it goes against proven economic theories like the laws of supply and demand, and it does not take into consideration the culture of Bahamian banking services. The topic of competition being essential to increase the supply of Bahamian banking services seems to be a causation-correlation fallacy. This topic insinuates that the lack of competition decreases the availability of banks or banking services. In my opinion, competition does the opposite. No producer wants to enter a highly competitive market where constant innovation is needed to thrive. This hypothesis has been proven as one of the known factors that negatively shifts the supply curve is an increase of competition, in addition to the number of producers available in the economy. The purpose of competition is not to increase the amount of banking services available to residents, but it is to ensure that the options available to residents are the best of the best. Competition increases the overall quality of service Bahamians receive at the end of the day, not the number of banks. What really drives supply is demand. The reason why Nassau has an abundance of banking services is due to New Providence having the densest population of residents in the country. This is the main pain point for the Bahamas because Nassau is sufficiently banked, whereas banks are constantly leaving the Family Islands. The Family Islands prove that there first has to be sufficient demand for supply to occur. The main issue is that since the population on these islands are so few and far spread, banks tend to incur losses from staying in the Family Islands since the foot traffic in these banks cannot compare to banks in Nassau. The prompt suggests that what heavily drives banking services is due to competition, but does such competition exist? Out of the 8 commercial banks available to residents in Nassau, 4 are Canadian-based, 3 are owned by Bahamians, and only 1 of these banks are US-owned. Canadian banks are the biggest banks in the Bahamas and are most commonly used by Bahamians. Although they dominate the banking sphere, some have actively stopped services like over-the-counter bank deposits, and others have streamlined their branches to actively encourage consumers to only use ATMs or digital options. Most of these banks have high monthly service fees, transaction fees, deplorable customer service, little to no saving or investment options, outdated systems, the list goes on. It is to the extent where consumers have started using investment institutions like CFAL as savings accounts as their money depreciates the more it sits in their bank accounts. Instead of finding security in banking, many see them as cash-grabbing institutions. The reason as to why banks in Nassau thrive is because people treat banking services like they do political parties. They will stick with one bank that they have been banking with for years, regardless of the obstacles, due to familiarity, not because the bank itself is competitive. In conclusion, competition is not essential to increase the supply of banking services. The availability of banking services in the Bahamas is more influenced by the demand and population density than by intense competition. While competition can improve the quality of service, the current banking landscape, dominated by few major players, raises concerns about stagnant innovation and limited choices for consumers. To truly benefit the Bahamian population, the banking sector should focus on enhancing services, innovation, and consumer options rather than simply competing for market share.